It's Tuesday, February 18th. Let's level up. Weird day in the market today. We had this early rally pre-market, obviously liquidation break, and then this very kind of short squeeze type of rally into the close. I was really not convinced by a lot of the price action today, although the candle on the daily closed fairly decently. Although we are starting to see a lot of these dragonfly doji types of situations near highs, which is always a little bit concerning. Breadth today was about 2 to 1 positive, 2.26 to 1 positive on the NYSE and 1.92 to 1 positive on the NASDAQ. But a lot of that came very late. AD lines today were pretty much bleeding off all day, and the close was only 474, which is really very anemic. Ticks were pretty much a distribution day with all of the bodies closing below the zero line except for 3 of them, 2 right in the morning and then 1 right at the close. And then I guess if you count those last few minutes after the close, that 15 minutes, that futures trade. VIX did also make a bit of a higher low, so the internals today were not exactly a beacon of strength, and we did see a little bit of weakness in some of the big cap tech names which had earlier rallies and then seemed to find sellers. I'm still of the opinion that we're in a responsive market. Even though the major market ETFs are making new all-time highs, futures are still lagging. Keep in mind, the ES high is 61.7875, and we're not quite there yet. I still think the bulls are fine as long as they can hold 6100, but that area does really need to close. It would repair a rich close to 6104. I've told you that that 6100 to 6105 half area has been key, and I will maintain that level as being the must hold on dips. On the upside, 6178.75 is the reference highs and could find some sellers. Maybe there is a little bit more room to the 6200, but we do seem to find sellers on these $100 levels. Qs are a similar setup. The ES today did hold the 200 MA 30-minute on the dip. The Qs never even quite got there, but we are also still below the all-time high there. It needs to clear the 22,450, which likely will be some resistance on the upside. I do, though, think the bulls are fine, quote-unquote, as long as they hold 22,074 quarter. If that were to fail, I think we probably come back down and tag 21,955 area. That would repair the rich close from Thursday. As far as VIX goes, like I said, we made a higher low today. No real danger here. The bears would need to get it at least over the 100 MA, which was the resistance that we saw back on 212. Currently, that's 1709, not a very high bar to carry. If we were to clear there, I think we could get over to the 1936 level, and that, for me, is the pass don't pass line for the gateway to 21s, 22s, and 23s. On the downside, the bulls will need to take out 1427 and hold for a move down into the 13s and the 12s. Doesn't mean that that can happen, but that's the 1-to-1 payoff as opposed to the 3, 4, 5, 6-to-1 on the upside for volatility. As far as SPY goes, we did have a dip below the 60907 reference high that we're using from 12.6. I think that the bulls were able to vindicate themselves and pretty much close at the high of day, but now we have 2 days of dragonfly doji spinning top type of tails at the highs. As long as the bulls are over 609.07, they're fine. If they were to have a lower high tomorrow and then somehow lose 608.38 low of day, I think we could see a liquidation break to 606.41, which is the 12/18 Fed day high, probably the 20 MA, wherever that is at the time, currently 604.75, and then that whole MA to MA, and in this instance fib to fib thing, where we could come down to 601.85, which is the 78.6. As long as the bulls can hold over 609.07, we're talking about channel checks. If we were to come up to the yellow channel high tomorrow, we probably won't. It would be 625.84. And then the green channel is a country mile away. If we were to do it tomorrow, it would be 642, which could be good levels to use for upside calls if you're buying some kinds of call spreads or wanting to do a call spread with a overwrite up top. Just like we do with put spread overwrites, we could do a call spread overwrite. Buy a call, sell a still higher strike call. Again, I wouldn't mind using those 626s, 642s as upper strikes. If you want to play for a downside move, maybe buy something like 605, sell 595 with an overwrite somewhere down around the 582 area, which would be the 114 gap fill that we never got. As far as Qs go, similar situation here. They're back up to the reference highs that we inked on 12/16. Needs to hold 539.15. Again, careful if we have a lower high tomorrow and then somehow take out low of day at 536.04. I think we would pretty much guaranteed move back down to 530.71, which is the 78.6, and roughly the 10 MA, which is currently 530.28 and rising. The underside of the old green channel, if we were to pump up there tomorrow, would be 545.88, good area to trim into. I don't necessarily know if these breakouts are going to hold, but it is very simple. As long as they hold, the risk is sideways to higher. If we're below them, the risk is sideways to lower with liquidation break potential, because that would be look above and fail scenarios. I would also look to the VIX for guidance. If we keep making higher lows in the VIX, that could be a sign of trouble. Look to the breadth, look to the AD lines, look to the ticks. The internals are crucial. If you see a market rising with crappy and failing internals, the chances are that those rallies won't last very long, and they are more the short covering variety. As far as Apple goes, still kind of chilling out here on that BABA news that they're going to do the Apple Intelligence in the Chinese iPhone. Today's low of day was 241.84. I think you could raise that to the stop, but I don't really get too bearish unless we lose the 50 MA at 240.54 and the 50% fib at 239.74. On the upside, we're just chillaxing right here at the 61.8 at the 244.54. So if that were to hold and we were to continue, we could probably see the earnings day high of day at 247.19 and maybe even make a run up to the 251.39, maybe that 250-ish area if you want to play it safe. As far as BABA goes, very nice run. Obviously on the Apple Intelligence news, I think we can raise stops here to low of day, 125.61. I wouldn't go more than 121.30. On the upside, the anchor VWAP comes in at 134.90 and falling, so that to me is a good area to trim some profits into, particularly if it hits before earnings on 220. I don't love that we ran hard into the numbers, but if there is a pullback, I think it will be a dip that I'll be interested in buying. I will be doing some put ratios playing for a pullback, because why not at this point? I can get them on super cheap, and I would be interested in buying lower. I already have on the December 95.82.5. I may do some type of an adjustment. I did them longer dated, smaller size, because I want to have time for them to work, and if they get into trouble, I can always play around with them with delta hedging with the shares. Generally, when I do these types of plays, I like for them to be shorter dated, but I did them longer dated this time on purpose because I actually do want to get into the stock lower, and I do have some ideas about how I'm going to trade it. We'll discuss it if we do wind up crossing that bridge. Tesla kind of continues to suck wind, but did get a bounce off the channel low like we were looking into. I think that this area here is very key. The bulls will need to hold 350.32, so let's just say 350. On the upside, we're into some potential resistance here at the 10 MA at 358.79 and the 11.11 reference high from 358.64. And I see that resistance all the way up here to 373.04, which was the reference low from 1.2, which kind of once collapsed caused the larger decline. If we are able to pump up to channel high on some type of news, the 50 MA is up at 401.97 and flattening. NVIDIA did what we were expecting once we cleared the 100 MA. We got the 124 gap fill to 142.62, backed off, held the 61.8, so that is the must hold now, 137.80. If that were to fail, we'll probably come down to the 100 MA at 135.77. That is very key. If that were to fail, we could see 133.07 and maybe even a run all the way back down to the 20 MA at 131.16, which will roughly be the 10 MA also. Remember, before the calendar flip, and even right after the calendar flip, moves to the 100 MA, when we went below it and then back up above it, were along. The big question now is that we've been below the 100 MA, our moves below it, back up above it, and then below it again, shorts. I'm generally okay as long as we're over that 100 MA. Again, that's 135.77 and rising. But if that fails, I think we could try the short side of the trade. Toll Brothers getting smashed after hours on earnings. This is looking a little bit fugly. Anything below 120.77 risks 108.86. If we were to hit the primary trend tomorrow, it'd be 105.23. Then there are some more pennant fills down to 95.46, and then we'd see. We're currently around the 115 after hours. I generally like to gauge where things are based on the after hours low. The after hours low here was 110.30. The higher low bounce from that was 113.03. So if you bought the dip, 113.03 is a pretty firm stop. Below there, I think could be short. If you're already short and you want to know where to trail your stop down to, 116.74 was the bounce high post dump. And a move above there, I think, would be a stop out. Probably for the move back to the 120.77-ish area. Intel is getting some love. We've been bullish. I told you I thought that was a buy for a dogs of the Dow type of a situation. I think bulls now need to hold the 200 MA at 24.71. We are getting close to some resistance here at 27.84, Before that fateful earnings that we saw back on 8/1, there was a lot of buying between 29.73 and 30.04. I think that is going to be a brick wall when the price gets up there. Maybe it has a pinprick through it, just because why not? But I do think that that area is likely an area for a rollback, and I will be doing 1/2 put ratios, playing for at least a move back down to the 25-26 area. Mobileye has been a stock I've been bullish on also. I think that they have a lot going for them. We played for the 200 MA on 1-2. It got smashed after that. We got to move back up close to the 200 MA on 210, and then today tapped it again. I booked the call spreads on the 1-3 move. I booked some of the put shorts that I have. I just left on some short puts and actually added on the dump when we got down to the 61.8 here at 15.08. I now took some of those off at the 200 MA, so what now? Still short some puts. I may play for a still higher prices. I think 21s, 22s, and maybe even the 23.47 could be in play. I generally think it's okay as long as we can clear the 200 MA and then also hold the 50 MA on dips, currently 17.56. As far as Bitcoin goes, they've seen a lot of money rotate into gold. We had that look above and fail on 121. I told you I wasn't super bearish, but I did think that there was sideways to lower potential, and we have seen that. I think the bulls will need to clear the 20 MA, 99,704, and for good measure, let's just say 100,000. Anything below that I think is still sideways to lower. I'd be looking to buy the dip closer to the 100 MA, currently 87,758 and rising. If we were to do a dump down to the channel low, 87,205. Gold we've been bullish on. I told you I thought the pullback on Friday was likely profit taking because we held right at the 10 MA. Today, new all-time high. We're getting very close to my end range target at 279.29, which is the 2 times range of the failed triple tap head and shoulders. If we do an overshoot, we could make a move to 292.62, and then after that, everyone's going to be talking about 300, right? We've seen now from the Friday dump that the hold currently 266.47, so don't let it get below that on you. If we do, I think we see the 20 MA at 261.04, and a potential check back to the breakout at 257.71, which is the reference head that we negated from the 1031 high of day candle. Interest rates have been a little bit problematic. We sort of have this push me, pull you situation. They're generally still making higher lows, but just. I do think that we will see the 93s and 95s at some point, but I do think that the 89.69 through 91.29 area is going to be some resistance, at least for now. Careful if rates start rallying significantly. Everyone seems to think they will, so that has me a little bit of contrarian. I've told you I'm long. I was long the 9100 call spread, short the 8580 put spread out in January of 26. I have since, with the decline, rolled the hundreds down to 95s because I had a nice gain on those hundreds and wanted to lower the cost of my trade. If things really start dumping to the downside, I could always invert it and go bearish on the call spread, maybe do something like bring the strike below 90, but I'm not really looking to do that just yet. If anything, I might even be inclined to take the 95s off and just be naked those 90 calls if we see a larger dump, because I have a lot of time for that to work. Generally speaking, I still think that we are in a responsive market. Yes, we are seeing some new highs inked on the Qs and in the SPY, which is encouraging. New all-time highs are always welcome. But they're not doing it with authority, and they are doing it on rather weak breath with potential higher lows in the VIX, so just stay on guard. Very simple. If we're above those breakout levels, play long. If we're below them, sideways to lower with liquidation break potential. Like and follow for more.